Good morning, everyone, and welcome back to this new edition of the weekly analysis. Let's start with a quick recap of what happened last week. In short, a week that had started a little quietly with a few dips downwards, but generally speaking, the indices, U.S. stocks were quite supported, with movements, that pushed prices up a little bit, even if with low volatility. However, basically, we have to file away this past week with, definitely a booster positive, encouraging upward push overall. And as for this week, there are actually a lot of different things brewing, so let's take a closer look at them one by one in order. First of all, let's begin by discussing and reviewing what exactly happened yesterday. In other words, the fact that the United States has finally, after a period of negotiations, reached this important and significant agreement with the European Union regarding the trade deal. And with tariffs set at 15% on a range of goods, including items such as cars, semiconductors, and so on, while other products will have zero tariffs applied, such as, for certain strategic goods. And in short, a clear and explicit commitment from the European Union to source its energy needs, that is both liquefied natural gas and petroleum products from the United States, in order to make up for the Russian supplies that the EU, in short, no longer wants to specifically make any sort of trade agreements or arrangements with, given the ongoing situation in Ukraine. That said, this is a week that really gets into the very heart of the earnings season. Let's also briefly touch on this. Basically, we can say that analysts are closely looking at just how much actual profits are exceeding the estimates. So I did a bit of research. In the first quarter of 2025, the estimates were for a year-over-year earnings increase of 7.2%. Actual earnings, however, ended up exceeding those estimates by 6.1 percentage points for a total of 13.3%. In the second quarter, however, the estimated earnings growth was 4.9% year over year. But a third of the way through the season, even though the percentage of companies beating consensus is over 80%, the earnings growth compared to estimates is only 1.5 percentage points for a total of 6.4%. This week, all the big companies will also be reporting, so it will be crucial to understand how this earnings season is going, and therefore to be able to make predictions about what the scenarios for the SP could be over the next 2 months. The situation, in short, is unfortunately even worse in some respects in Europe when it comes to quarterly earnings, which, as we have seen, continue to perform noticeably worse than those in the United States. This is the case even though institutional investors, according to some recent research and analysis, still appear to be overweight in Europe, especially when compared to a more cautious underweight positioning toward US equities and the dollar. We will then see, in short, what the latest developments might be in light of these agreements, and also with the conclusion of the quarterly earnings season. So we will definitely have a more complete picture. As I was saying, it's a busy week also from a macroeconomic point of view. We have this week on Monday and Tuesday, so today and tomorrow, US Treasury auctions for 2, 5, and 7-year bonds, which are important to understand how the yield curve might develop. Then on Wednesday, we have the central banks. We have the Bank of Canada, the Fed, and the Bank of Japan. Thursday, we then have the July CPI figures for Europe, while on Friday we'll have the European and American manufacturing PMIs, and in addition we'll also have the US non-farm payrolls. So a very, very, very busy week from a macroeconomic perspective. Let's say that, with this introduction out of the way, let's obviously move on to take a look from a technical point of view at what we can expect this week. As we were saying, the week started off well with a good bullish momentum. In short, all the stock indices opened with strong upward gaps, including the European ones. Even though the DAX at this moment has just closed the gap that was left open due to this agreement that was reached. And as usual, let's start with the Nasdaq. At the moment, the Nasdaq was really on the rise, actually hitting today's highs precisely, reaching a significant peak for the day, but then it dropped back down to retest the RD2 area, which is a key level if we take a broader look at the overall market movement. Surely we can also expect for the American stock indices a probable closing of this gap and then possibly a continuation upwards. In short, I expect a probable test of the 24,000 mark for the Nasdaq if, well, the earnings reports coming out this week turn out to be good, and if the macroeconomic data supports it, then they could definitely provide an additional upward boost to global stock markets, American stock markets, that is in particular. On the downside, we need to monitor more significant levels. This week's via zero is definitely important, 23.3, as it could open the way to re-entering the lower part of a broader range, which could also lead prices to retest the MR0, the monthly level. So let's keep an eye on these levels, MR0 at 22.150, 22.160 on the downside, or on the upside for this week, I'd say we really need to monitor 23.650, which is an area that I believe, if broken, could provide the momentum to reach these MR2 and VR2 areas, basically between 8 and 10, 870, even today probably. But in any case, we can't really make predictions. We need to have these levels clearly in mind so that we can act when the price gets close to these levels. So let's monitor this area on the upside, while on the downside, let's watch this area. We could also stay in this limbo, waiting, as I said earlier, for important data and upcoming quarterly reports from major companies, which will definitely be market movers. Let's move on to ES, which also continues with a very, very bullish attitude. It wobbled a bit, just like the Nasdaq, going down to touch the lows recorded right at the opening of today's regular trading hours. Here too, I expect a likely closure of the gap at RD0, so probably a bit higher as the HV, and then possibly a further move to the upside. The same assumptions obviously apply to ES and all the other American equity futures. Of course, this whole agreement is great, but we still need to see if supporting data and quarterly earnings will come in for everything we've discussed. On the downside, as far as ES is concerned, I would definitely keep an eye on this level here around 6,380 to 6,390, which is certainly an important area where the market has lingered for a while. So it's definitely a zone that should slow down the downward movement a bit. Obviously, if this area were to be broken, we could also expect a test of lower levels like 6,350, but also 6,300, which during this recent rise proved to be quite a tough and stubborn resistance to overcome. If we were to come back to test it, it would definitely act as support in the same way. On the upside, of course, we need to monitor this entire area here where we have VIX clusters at the monthly, weekly, and also monthly levels. So this is definitely an area to watch. 6,550, 6,600, and 6,660, the area that could be the target for this whole movement, provided, as we mentioned earlier, that strong quarterly earnings for the big companies and supportive macroeconomic data come in to back up this growth. Let's clearly move on to the other American futures, starting with the Dow Jones. It also opened with a strong bullish tone, so certainly the industrial companies that make up the Dow Jones index will also benefit from all these trade agreements. The price has crossed 45,000, and 45,000 is really the round number that I think at this moment is the area to watch to avoid dropping below, because we've surpassed this previous high recorded last week on Wednesday, but now we're working just below it, so we might also expect a gap closure before possibly continuing upward, even for the Dow Jones. On the upside, we should monitor the 46,000 area as a potential target. The area of the weekly VIX cluster could definitely serve as a good landing point, but also this zone where we have MR2 and VR2 for this week is certainly an area where we will encounter some resistance, where the sellers are likely to be a bit more aggressive. On the downside, we should instead monitor 44,500, 44,000, which basically coincides with this area here, the VIX area for this week. 44,500 is a first support, but there could be an extension down to this area here. Obviously, if we were to break through these lows, which actually correspond to these highs here, so 44,800, 45,000 as we mentioned earlier, let's also take a look at the Russell, of course. Here it also started well, but couldn't go beyond 2.95, 2.3, which is an important resistance area, both as a round number and because the market has hit this level several times. So we need to monitor this area on the upside, because if it breaks, prices could test the monthly and weekly VIX area just above. On the downside, of course, the first level to watch as the initial target is the closing of the gap around the 2.7 area. The next level is obviously 2.5, but 2.3, 6, 2.2, basically around 2.3 is the most important area, because if that breaks, the next likely target could be this zone here around 2,160 to 2,140, which was previously a strong area of resistance in recent weeks. Let's also take a look at the DAX. As we mentioned at the beginning, it went to close the gap here. It is the gap that was left open with last night's opening. It went and closed it exactly. Well, as I said earlier, at the open around 9:30, bounced and now it's working on it again. So basically, if this level doesn't hold, prices could go back to test this area here, which also represents the BC3 level, so around the 24,150 area. If this level doesn't hold, it would open up room for a drop even down to 23,500, because then we have these levels here around the 24,000 area, a round number, but after that there really aren't many other obstacles. On the upside, let's keep an eye on this area, 24,640 to 24,680 with double all-time highs, so a breakout above could provide Let's move on, even up to 1 at the monthly maximum level. The high has almost reached its conclusion, so let's keep monitoring this area carefully. Let's move on. Let's move on to university currently. To commodities, starting with oil. Oil hasn't really been affected by this gap opening in the stock markets, and overall the movement has been limited. Let's say we're in this limbo between 67. Let's switch for a moment to 30 minutes so we can take a closer look. Let's say it's dropping a bit. As you can see, we could even draw a couple of trend lines to get an idea of the movement. We are seeing highs, so there's a bit of volatility compression that could lead to a breakout, but movements and then we'll see which way we break out. I'm just drawing this quickly, so please take it with a grain of salt, but it seems fairly reasonable to me, so we can definitely use it as a reference on a 30-minute chart, which can certainly give us a good idea of the movement we're currently experiencing. So a reduction in volatility at the moment, so let's keep an eye on these two levels, maybe marked by this forming triangle. As for the upside levels, watch VR2, which represents this area, tough area to break through, since it was only breached on this occasion, and after that the price has stayed below it. So 67.40, 67.50 to the upside. On the downside, monitor this area around 64, 64.50, because breaking through this zone could trigger a move, but the range is quite wide. Remember, with switch contracts, it's true. You probably already did that this week. As for commodities, tomorrow the December contract also becomes the front contract for gold, so be careful when you're trading gold to switch to the new contract. Let's take a closer look and see what we can expect. Basically, it's come back quite a bit since last week, and now it's trading around 3 to 330. Let's say it made quite a surge to retest the highs that were previously recorded. The area of lows that we need to keep an eye on is definitely this 3-3 zone. 323,280 is the level, a very important support level. So let's keep a very close watch on it, because a break could trigger fairly strong selling, but it could also definitely be a good opportunity for some broader, longer term buying. On the upside, of course, we need to monitor the area of the weekly highs, which more or less corresponds to this area here around 3,430, 3,450, which is definitely the most interesting area for potential bullish breakout. We still have to look at, let's take a look at, SPX. In short, a similar situation right now. It's really looking upward, because if we manage to break through 6.4 decisively, then we have upward targets at 6.5, 6.6, even 6.5. In short, I posted something in the chat about the options, basically about the positioning from last week, with some pretty ambitious strike prices. We'll see if they'll find the strength to push the market even higher. On the downside, I've always kept this line here, which has represented this major barrier to break through around the 6,300 area. So on the downside, we need to keep an eye on that. Let's also take a look at the crypto. So this is ETH. Basically, last week, it had its first nice pump, then it pulled back quite a bit, and then basically went back up again. Let's put it on a wider chart so we get a better idea. We basically hit this nice high last week. At the beginning of the week, it dropped, pulled back a bit, but now it has regained strength. We reached a new high at 3,950 with momentum that could push prices into the 4,200 area, which represents the weekly VIX area. On the downside, we are keeping an eye on the low at 3,500, which seems the nicest pivot point. We might also see a test of this area 3,700, 3,750. It could also be an opportunity to go long again, hoping that they might break through the previous high. Let's take a quick look at Bitcoin as well. Here it is right on the chart. The situation here is more or less quite similar to what we saw before. Last Friday and Monday on this 30-minute chart, it made a really nice surge with a strong high, then pulled back less than ETH did. It stopped more or less exactly on this week's weekly support VS2, which also represents the area of the monthly level R2 that we had previously crossed and broken through. Then retested once, twice, 3 times, slipped a little, but now it's recovering, making a gradual move upward. If we were to break this week's VR0, we would see prices reach the weekly high area, which is expected to be around 25,100, 25,500. We've reached the end of this weekly analysis. I invite you to leave a like on the video and follow me. We'll catch up later in the chat, and thank you for your attention.